Damon Yudichak here, local CPA, where we reduce liabilities and increase tax returns. What I want to talk today is about the important subject of preventing employee fraud. So if you're a single man shop, typically this is not a concern for you, but as your business grows and you're hiring staff to delegate your responsibilities to, one of the first things that happens is those administrative responsibilities are delegated. So what we want to do is make sure that we never allow an employee to have the opportunity to commit fraud. So what I'm going to do is go over the basics of fraud and then a simple procedure to think about when you're setting up your systems. Alright, so what we have here is called the fraud triangle. And with the fraud triangle, this is where the three main characteristics exist when fraud occurs. Okay, the first of those being rationalization. So when an employee is willing to rationalize their dishonest acts, where they say, hey, you know, the big man is making all the money and I deserve a bigger cut of it. Then the other opportunity is where they have the opportunity to maybe both write checks and sign for checks. And then the final thing is when they have pressure. So this could be where our employee who's in charge of signing our checks, she has a child that just went to the hospital, had to get an operation, and now has a big debt of $30,000, $40,000 because she was taking care of a child. So in this instance, we've got an atmosphere where fraud is likely to happen. And so the thing to remember here is that, you know, this pressure that employee has nothing to do with you. So there's probably not much you can do to prevent that. And whether or not someone rationalizes their acts, you can't really control that either. So really the big area where you have to control is this opportunity. And so when you're doing this, what you want to do is make sure that you segregate incompatible duties. So what are incompatible duties? Let me go through those now. Okay, so this is what you want to do. You want to remember the art. So there's three types of duties. There's authorization duties, record keeping duties, and custody duties. Okay, so now if we're looking at this, let's just take a simple example. With authorization, that's the ability to write checks or maybe to pay bills online. Second one is record keeping. So this is the ability where if the employee also is keeping the books within their accounting system. And then the final thing is where they have custody of the checks or custody of the money. So what we'll want to do in this instance is make sure that employee, if they're in charge of record keeping, they're not going to also be able to authorize the checks. So they can write the checks and then they can give the checks to the boss and then he can sign them. And he always wants to make sure that there's backup support, an invoice for that check. And then the final thing is custody, making sure that they do not have ability to go into the bank account. That's another example of custody. So these are the three basics of preventing incompatible duties. And when you're setting up your administrative, record keeping, and accounting systems within your company, you want to keep this in mind so that you're preventing incompatible duties from coming together and that the one person is in charge of all those things. Check out our website, Yudichak CPA.com, and have a great day.